Welcome back, traders. This is our gold weekly review, and we'll jump straight to the title, which is for this week, gold, it could be a grizzly bear. Now, we start with this title. We think that this title is very accurate for these previous two sessions, we could say, with our first point being the precious metal corrected lower and seems to keep intact its bearish momentum. Now, what happened last week with the US-Mexico showdown dominated gold's activity, but gold corrected lower, displaying some calmness in the financial markets due to the fact that they eventually found an agreement, they found a deal between them. They gave them just enough time for Mexico to find a deal, and the tariffs were removed. A lot of risk was removed, and this it gave space basically to bearish momentum for gold to be enacted. Our second point is the vital question: where would gold head in case of a surprise deal between China and the US? Now, I'm mixing this. This is a lot more important than what happened with Mexico, because China and the US are the leading global economies. So China is basically requires a lot more, requires from the US and from China, it requires a lot more caution between them, all right, because they're so the size of their economies. Okay, and I'm just thinking that if the US could use the same methods that it used on Mexico, on China, in order to force them into a deal, this could be the ultimate scenario for both economies and for the global economy. As I said, the methods used on Mexico did work, all right? And now what is happening with Trump putting more pressure on China ahead of the G20 meeting is exactly what he's trying to accomplish. He's trying to get a deal. He's trying to get them to negotiate further. And this could be good for the bears, I would say, for gold. Now, our third point is markets could have already priced in the Fed's dovishness. All right. So about the Fed has a meeting next Wednesday. A lot has been said on what exactly is going on the US economy. Now, the Fed has remained cautious and has not leaned towards any direction, and we will need to see exactly their opinion about what they believe is important, what is said to be important but is not really important, all right? Because a lot of analysts and a lot of people are feeding off what is being said. However, what is reality is something different, all right? Because the US has figures that has financial data that could be questionable, but also has very strong financial data that indicate a very healthy economy. All right. So it could be a big question mark what the FOMC meeting next week could have in mind. This is our gold daily chart. All right. We would like to start by saying that gold had increased in value for 8 consecutive sessions. All right. This is a very strong bullish market. And in the previous 2 sessions, we saw the bears kick in. That's why we have our title. It could be a grizzly bear. Now, from this point, if the bears are to continue their current momentum, we could see gold breaking below the S1 1322 level, heading towards the S2 1315 level. Even lower, we could find the 1307.50 level. And the ultimate bearish scenario would be for gold to reach the S4 1300. All right. This is the ultimate scenario, because even though this has been a very long bullish run for gold, it did not start at 1300. Let's remind ourselves that it started around the below the 1287 level. All right, so we understand that there's a lot space for bears to kick in, even though this could happen gradually. It doesn't mean it's going to happen in 1 session or in 2 sessions. It could happen gradually, like the upward momentum happened. So at the moment, gold is trading between our R1 1328.50 level and our S1 1322 level. However, if it corrects higher, it could go to the 1334 R2 level, and even higher we could get the 1340 level. However, we remain in a bearish momentum. Our opinion is that gold could move lower. All right. We want also to emphasize the RSI indicator below, which is just below the 70 reading. All right. And this could indicate that an overcrowded long position could be ready to reverse. Now, if you've heard something in this video that you find useful, then I say you use it to your strategy and apply it to your trading. From everyone here at IronFX, we wish to you solid trading, and we'll catch you soon.